Okay, just a small correction. So here a previous year of completion of the construction, if you see in our question, it is completed on 30/11/2019. So it will fall in 19 and 20, right? So 19 and 20. So here it will come previous year of completion of the construction 19 and 20. So plus 4 years. Okay, so plus 4 years. So 20 and 21, 21 and 22, 22 and 23, and 23 and 24. Right, we need to check this definitely. Right, if you observe in our question, what is the previous year of the question in this 23 and 24? So within 5 years only you can claim the deduction. So 23 and 24 I can claim, but in 24 and 25, 25 and 26, in all this I cannot claim. Okay, I cannot claim the deduction. I could have claimed in 20 and 21, I would have claimed in 21 and 22 and 22 and 23 and 23 and 24, even 19 and 20. So 5 years, but I cannot claim in further years, right? So the we have taken this 1918 previously, so the answer does not match. Okay, so let's just say in this question, if they have given like previous year is 24 and 25, okay, 24 and 25, then I cannot claim the pre-construction interest because the 5 years will end by 23 and 24 itself. Okay, so that's it with this question. And next one. So the Purna question is done. And also the unrealizable value you can do in two ways. Okay, so normally what do we do? While you are calculating the GAV, you do a municipal value or fair value, whichever is higher. You will get one figure, you will compare with the standard rent, then you will get expected rent, then you will compare with the actual rent received or receivable minus unrealized rent, you will get the GAV, right? Okay, so if assuming that all conditions are satisfied, you can also, instead of doing this, you can also deduct. First you find out GAV as if there is no unrealized rent, then again you can deduct it from the GAV, unrealized rent, you can deduct it from the GAV. This is also one of the way. Answer may change, right? So but that is permittable. Okay, if you see here, permit deduction of unrealized rent from gross annual value. Okay, so the answer may change, but it is correct. Now this is also pretty much same thing about this unrealized rent. Rajalakshmi owns a house property at Adyar in Chennai. The municipal value of the property is 5 lakhs. Okay, this is easy. Municipal value 5 lakhs, fair value 4,20,000. Okay, then we will take whichever is higher. You will compare it with the standard rent, which is 4,80,000. Then you will get the expected rent, which is 4,80,000. The property was let out 50,000 per month up to December 2023. Thereafter, tenant vacated the property and Rajalakshmi used the house for self-occupation. We already done. So part of the year used for the part of the year let out, part of the year for self-occupied. What do you do? We will compare with the expected rent for the whole year. This is the expected rent for the whole year and actual rent for the let out period. So what is the let out period? Up to December 2023. So that means 9 months. So 50,000 into 9, 9 5 is 45. So 50,000 into 9, it will be 4,50,000. Then we will take whichever is higher, right? Obviously 4,80,000 is the higher, so that would be our GAV. Okay, so gross annual value will be GAV. Then from there what do? We will deduct the municipal taxes. So here they have mentioned she paid municipal taxes 12% during the year. So the municipal value is 5 lakhs into 12%. 12 5 is 60. 60,000 we are calculating, deducting the municipal tax. Then you will get the NAV. Then flat deduction 30% of NAV. Then interest on borrowed capital. See again here, this is a let out property and then there are no limits. She incurred 25,000 during the amount for repairs. What is the maximum limit? I think we discussed 30,000, right? So maximum limit 30,000 for the repairs. So you can claim maximum 30,000. She incurred only 25,000. So she can claim. For let out property, there is no limits. Whatever the limits I am telling, that is for the self-occupied property. But now it is a let out property only. So she can claim fully 2,69,000 will be the income from house property. Okay. Now, while doing this, if you see this part, what I have done in this question is, I did not consider unrealized rent concept only. Now let's see this one. Rent for the month of November and December 2023 could not be realized in spite of the owner's efforts. All the conditions prescribed under the Rule 4 are satisfied. Okay, under the Rule 4 are satisfied. That means you can deduct from the actual rent, right? So how many months we did not receive? November and December. So 2 months, 1 lakh you did not receive. Okay, so you can do in two ways. Again, I'll just copy this. How much is the expected rent we got? So expected rent is 4,80,000. Sorry, here itself, yeah. 4,80,000 is the expected rent. Now what we're gonna do? We're gonna compare it with the actual rent, right? So expected rent, which is 4,80,000, then actual rent, which is 4,50,000 if you have received for the all the months, but we did not receive for 2 months. That means 1 lakh you did not receive. So actual rent will become 3,50,000. Anyway, we will take whichever is higher. Okay, then you will get what? 4,80,000 as GAV. So that's why our answer did not affect there. Then as usual, 30% deduction, municipal tax, and then 30% deduction under and 30% deduction under section 24, and then interest paid on borrowed capital. So what is the answer we got? We got 2,69,000. Okay, but there is one more way to do that. If you do that, answer will change. So let's just say, after finding out the GAV, which is 4,80,000, okay, which is 4,80,000 minus unrealized rent, right? Here in this method, I have deducted here. Okay, I have deducted here. Now here I am deducting from GAV, unrealized rent, which is 1 lakh. So then NAV will become 3,80,000. So what is municipal taxes, which is 60,000. Okay, then it will become 3,20,000. Then from there, this is GAV will become, and then NAV will become 3,20,000. Then 30% of NAV and 25,000 for repairs. So 3,20,000 into 30%, which will be 96,000. So the final answer will be 1,99,000. So based on the method, answer will change. Here 269, here 199. Obviously this is better for the assessee because he has to pay less tax. Okay.